Good morning and welcome to Morning Markets with True Potential. Checking up on the news and developments over the last 24 hours. Mixed day for markets yesterday. After a choppy start in Asia and US, both indices ended up in a positive territory. But we saw a marked weakness in UK and European indices. What was driving this divergence? In the UK, the energy stocks continue to lose grounds amid the lackluster performance in oil markets overall. We also saw some weakness in the industrial sector data, which continue to weigh on the overall demand in the economy. As businesses continue to struggle with supply chains and higher inflation. This morning as well, we got some weaker data in the retail sales in the UK. Volumes fell by 0.5% in month of May, and there was some downward revision in the April numbers as well. It all points to what we have been talking with you over the last couple of sessions, that we continue to see some cooling off in demand overall. Though, having said that, overall volumes were still almost like 2.6% up from their pre-COVID levels. So it's still growing demand, but there is a slowdown in the overall demand growth. The fall was largely attributed to the low volumes in the food store, which fell by 1.6%, where we are seeing the reduced spending in the food stores, and perhaps that is linking to the rising food prices and cost of living in the UK. So the consumers are feeling the pinch in their pocket. In face of these growth worries around, bond yields came in yesterday. UK 10-year bond yields fell by around 18 basis points, and they ended the day at 2.31% yield overall on 10-year bonds, which were down from their Wednesday highs of 2.65%. So there is a marked moves in bond markets we are seeing, recognizing there is a fear in growth fears widespread. While the moves in the 10-year in the US bond markets were much more muted. That was perhaps related to the Fed chairman Jerome Powell yesterday testified in front of Congress that the Fed is fully committed to rein in inflation pressures and at unconditional basis. So that is the main target. And it may the offshoot may be that they are preparing the market for overall weakness in the economy and then slower business activity overall. This was also confirmed by some PMI numbers in the US, which continued to again soften yesterday. We saw S&P composite PMIs across the board, and also the Kansas City Fed index came in much weaker than expected overall. Amid this, S&P 500 had a choppy sessions overall. We saw some gains in defensive sectors. Some big tech names were also performed well, but we saw again marked weakness in the energy sector. So I think it's still a choppy environment. A large cap though overall performed better than small cap, but overall it's a lackluster market, and markets are still settling in which way the growth will settle and how far the uncertainty will continue from here. What we look for today, we have German business IFO index data reading coming. We will get some indication of how German businesses are feeling about the overall economy. We will also get later in the day US new home sales data, which will point towards some weakness given the rise in mortgage rates we have seen in lately. So it will all point toward a slightly lower business activity and housing activity overall we expect for the rest of the day. We will leave it there for now. We will keep you posted as the things develop for next week, and have a good weekend. Thank you.
If you're interested in taking your investing to the next level, or would like to know more about the options available to you when you retire, then download our free guides to ISAs and pensions. These are available in the video description below.